I'd like to introduce to the stage my friend Emil Michael, who has an incredibly storied career, and he took his time to join us to lead a panel on angel investing. Please welcome to the stage Emil Michael and his panel.
All right, great. Good to meet you all. All right, we'll start. I'm Emil Michael. I live here in Miami. I used to be an entrepreneur, sort of a serial entrepreneur. My last company was Uber. I was number 2 there. And now I angel invest. And we're going to do a panel today to talk about investing, whether in your own companies, in other people's companies, whether you do it from a company like Microsoft, and just what the state of the world is today, given that we're in a different economic climate than we've been in for really 10 years, and how that's affecting investing, particularly in underrepresented founders, given that in the last few years we've had a change in dynamic. People got more excited about investing in underrepresented founders. And what does that mean now that we're in this climate? Is it going to get harder? Are people going to keep their commitments, or what? So why don't we start with you, Kange. What do you think? What's this enthusiasm that we've had in the last 5 years, where people said, I'm going to allocate some money, and I'm going to find people who we wouldn't normally find? Is that going to continue, or is the belt tightening going to hurt that community first? What do you think?
I think it's going to hurt that community first.
Sadly.
Unfortunately. I mean, even before the economy got the way it has gotten, in some cases, that sentiment was not necessarily sincere, right? We talked yesterday about over-mentoring, or more mentoring and less investing, right? And so I think now will be about giving advice, but then saying, but we're not ready to write that check yet, for whatever excuse they can come up with at that time.
That's too bad. Yeah. Does anyone have an optimistic view on this? Okay, so tell us what you do at Wodwater first.
Sure.
And then answer the question now.
Sure. So Barran Channer, good afternoon, everyone. Miami native. Wodwater Investment is a real estate investment firm. My background is computer engineering prior to transitioning to real estate development, and so that technophile and continue to pursue that. I actually see one face from my undergraduate that I recognize from Rensselaer Polytechnic Institute. So, but welcome. My take on it is it depends on where you are in the process, right? I think it's important to appreciate that angel investors are investors of choice. We don't necessarily have a board, we don't have a structured IRR, we don't necessarily have investors to the same extent, so the only thing that impacts my ability to invest is what happens in my regular business and what happens at home in my family life. And for most of us who are small to moderate business owners, the economy, shockingly, we're talking about inflation and potentially recession, but if you're running a small business, in many cases, things are actually reasonably good for you. So if you had the investable capacity to be an angel investor before, you pretty much still have the ability, and maybe it cuts you by tens of thousands to a couple $100,000, but you're still motivated to invest. And you now recognize that if you're focused and motivated to invest in black and brown founders like me, that they're even more challenged. So you're actually more eager to do it. The question just happens to be valuation. No, we can't talk about $20 million pre-seed with no revenue, because the next guy after me is not going to recognize that. So too bad. But what you all need to, the folks who are thinking about the world in that way, if you're targeting true, first round, true pre-seed round, I think you're going to find that there are people out there that want to help you, want to mentor you, and their friends, my friends who are professional VCs, legitimate VCs, are probably more inclined to take my introductions to you because they're not as busy as they used to be last year. So you're going to be able to get some help. If you're in seed and above, then you're into their world. But I do think seed stage, there's so much money that has been raised, and you all may know more than I. They can't sit on that money forever because IRR is time driven. And so, they've already lost 6 months. They can't lose another 9 months and not invest. The question is just going to be valuation.
Okay. What do you think, Aljandro?
Well, so I tend to be a little more negative on what's going on right now.
But tell us where you come from first.
Yeah,
Give
so good
people
morning,
background.
everyone. I have about 17 jobs, but I'll share with you just two today. I work for Microsoft, and I'm the global leader for modernization for their consulting services. That's one job that sort of pays the bills. But my most important job is the one that I say is where I help fund, find, and grow Hispanic and Latin ventures. And we help them sort of from the seed round and all the way to Series A, where we typically co-lead. So the reason why I'm a little bit negative is because I was just looking at the paper today. There was a new report published this morning where last year there was only 2% of the VC money allocated to Latinx or Hispanic-backed ventures. And it hasn't improved. Since 2017, it's been 1.7%. So the numbers are not with that community, and we focus a lot on trying to figure out, we're in Miami. This is the closest city to the U.S., as you all know. And so one of the things that, for us is it's tough is to try to see that these times are not helping, and we're seeing it. But there's got to be a better way, and that's part of what we talk about every day. We got to figure out how we turn those tides.
Yeah.
So.
Okay, that's too bad. Channing, I would love to tell people what you do, and sort of you invest in your own businesses.
Yeah.
And so I wonder what you're seeing out there.
Hey, y'all, I'm Channing Crowder. Played ball for a while for the Dolphins, and now I have a podcast, the Pivot Podcast, and we were trying to help. I'm a young dude. I ain't graduated from college, so these dudes, all y'all are way smarter than me. But with having money, with having athlete money, you get people come to you all the time. 2-3 times a week, people come up and just want to pitch stuff to you. And I have a great team. Johnny Williams, my attorney. But my whole investment portfolio is stuff that I'm interested in. So like tech. I'm sorry, brother. I don't know anything about tech and NFTs and whatever else, crypto and all that. I'm a country dude. I fish and hunt. So I went and bought charter boat companies. And I went and bought a shark diving company, you know what I'm saying? And like an angel investor, buy a $25,000 boat that kicks you back $10,000 a year. But now it's 4 years in, making $40,000 off a $25,000 investment 5 years ago. Like small things like that. I just invest in things that are interesting to me.
Sure.
And that's the thing. So I don't know different levels of investing and all that stuff, but that's my thing. Like if I'm interested in it, I'll do it. And I also don't invest in anybody's side chick.
So you said that.
I was telling you, like, you got to be married to your business for me to invest in it. Like if you have something, you have something going, and like you're comfortable here, and now this is something you're starting, and you want me to invest in that. I don't want to invest in that. I want to invest in your wife. I don't want to invest in this, whatever's over here. So that's my approach, but I think the diversity of the board and just really respecting y'all and how y'all talking about RRAs and RRRs, and I don't know these letters y'all talking about, but my approach to investing and having that capital from sports and now just trying to move forward, being a younger dude and understanding that. So that's what I do, just passion. Like if I'm passionate about it, I'll put money into it and help that passion make more money for me and my family.
Yeah, that's great. And then when you
Can
tell
I
it-
make
what-
a quick
yeah,
comment?
Sure.
So Channing, just to push back on you just for a minute, if you don't mind.
Yeah.
So you talked about how you don't want to invest in the side chick, but actually a lot of investors that do that is how you unintentionally rule out diverse founders because of the fact that traditionally don't have as much generational wealth, and also there's a pay gap, and so sometimes you don't have a choice but to start something while you're working and then eventually go to full time, and so you might unintentionally be actually ruling out some really innovative people that are people of color.
Oh, okay. Yeah, my thing is that my thought about that, I use the funny analogy. I mess around. People don't know me, but I just.
No. I like the analogy, though. That was
I
good.
mess around all day long. And my thing is that I want to make sure that if I'm investing with you, you're putting your heart and soul into it.
I hear you.
That's kind of that thought is that
Right.
if you're already if plan A is generating and running and being a part of your life and that's what's fueling your life, why are you going to put more into B? So I want to be a part of A, and that's kind of the thought that I've approached it with. But I understand what you're saying because you got to feed your family and also try to build on the backside. I understand exactly what you're saying.
So Kange, I didn't get you to introduce yourself initially. So why don't you do that, and then I'd love to hear what you would say, what you think you would tell young entrepreneurs today who are just starting, right, in this environment. They haven't raised money yet. What you would tell them to do now, right, if they were going out to raise money. What would you tell them to pitch in this climate, which is very different than it's been since 2009, right? This is the first dark climate that we've been in economically. What would you say if they came to you for advice?
Sure, thank you. Hi, everybody. My name is Kaneene. I work for SAP, which is a large enterprise software company. We compete with people like Oracle. I lead the startup accelerator there, non-dilutive. It's called SAP.io in North and Latin America. I also angel invest and work with individuals who are formerly or currently incarcerated and get them to be entrepreneurs. To answer the question, I think it's interesting because when you are a founder that's a diverse founder, for example, you are asked to demonstrate more traction than everybody else. You have to fundraise more frequently, and oftentimes you're getting less money per round. And that's exactly what now every founder is facing. And so actually, we have a superpower because we have this built-in resiliency that's needed today in the environment. So I think if you're starting now, you should know that you automatically have a competitive edge, is that you have the cojones to actually fundraise appropriately. Mm-hmm. So I would say the advice would be to kind of just keep at it and know that you fundamentally can compete better against your peers.
Oh, well, there you go. Cojones, side chicks is getting Barran, so when an entrepreneur comes to you at Wodwater, what do you tell them these days?
Yeah, well, usually not coming at Wodwater. They're coming to me in my capacity as the chair of Black Angels Miami, the Angel Investment Network. But a couple of things I would say. One, if you can, if you're not a technical founder, get a technical founder, someone that can actually code. Now, mind you, we're talking about innovation. The reality is, as Channer said, there are a bunch of companies that are going to be making millions of dollars that aren't doing anything in technology. They're fishing, they're construction. Well, let's address the direct question about innovation. If you're talking about technology, if you're not a coder, get a founder that's a coder at that stage. Cash is so important to you that it would be better for you to give up some meaningful amount of equity, if not to yourself, to someone else, to get someone who can actually code and help you create a product. Two, I always ask, what's your affinity network? You know, are you part of some alumni association? Are you part of some school? Are you loved in some city? Because oftentimes that's where you can go to get your pilot, to get a proof of concept, and your university, if they like you enough, can say, oh, sure, we'll try your application. And you'll say, you know, even though only 5 people are using it, University of Florida with 60,000 students is prototyping my application, and that now starts to help you. So that's another area. The other one is, I'm not opposed to marketing, but at the early stage, or sales, at the early stage, I think the founder needs to be the marketer or the salesperson. I don't think you have enough money to hire someone to learn your product and be passionate about it. So you have to sell it yourself. It also will save you a substantial amount of money in those early stages. And then finally, usually they're talking to me, they've already figured out this part of it. It would be target early stage investors who will have an affinity for you. Not that others won't be interested in you, but likely someone like me will think the idea is marginal but possible and still be willing to invest in you. Someone who doesn't have an affinity towards you is simply going to evaluate you as to whether it's a really good investment idea at that point in time. They're not going to invest in your opportunity to turn it into a great idea.
Yeah, makes sense. So Aljandro, Satya from Microsoft, one of the greatest business execs of our time, comes to you and says, 2%. We've been at 2% for 5 years. I give you a magic wand to change that to 5%. What do you need?
Great question. So I think that what we need is, there's a lot of talk and a lot of people talk about it, but very few do something about it. So that's probably the first thing, is more action, right? I think that the second thing I would say is that we need closer partnerships between corporate ventures, right? So actual corporations, and Miami has tried that, and I think in the past, but they need to try harder in terms of developing partnerships between, you know, VCs or PE firms, corporations, the government, and universities, right? So I think it's not a kind of one bullet that is going to solve everything. is going to be around bringing the whole ecosystem together to sort of try to make change. There's one thing right now that new startups need to sort of think about as they're trying to raise cash, or the ones that are in this situation right now. What I would tell them is cash is king. Conserve that cash as best as you can, and it is not the same thing how it was 2 years ago, right? There's other accelerators or organizations that are sort of trying to back a lot of these firms. And what you really need to focus on are things that are going to differentiate your product and your. So launch only things that you think are really going to differentiate you from the rest.
Mm-hmm.
And, in the past 2 years, there's been an overabundance of whatever was the latest shiny object, and right now you can't do that anymore, right? You really need to focus on something that is really going to be disruptive. Otherwise, wait a little bit longer, I guess.
Yeah. Okay. So Channing, some kid comes up to you and says, I want to be a ball player, I want to be a business owner. What's the best advice you give them these days?
Well, ball player, good luck. It's not easy, but the business side of it is what I kind of I coach too. I coach high school as well, and that's what I try to tell the kids. Like it's luck to play ball, like to stay healthy and be big enough and strong and fast. 1% and 1%. But the business side of it is really putting a team around yourself that helps you out. Like I joke about not having a college degree and all this stuff. I left as a sophomore. But like my attorney, Johnny Williams, Alex Alexis with Merrill Lynch is my financial guy, so I could run things past them. And I just tell people, put a smart team around you. Like I never want to be the smartest person in the room. If I'm the smartest person in the room, we have trouble. But why wouldn't I put a bunch of great people in the room with me to help me make decisions? And even as athletes, I mentor some of the ball players now, and I tell them, like, ask for help, ask questions. I'm the most question-asking dude in the world. I ask everybody questions because I just want to be educated and learn different things. And just like, talking about with what's going on now in the world, like getting into different private equities and different things that I never knew about and infrastructure stuff. When they signed that $1 billion bill, like I called Alex and I was like, hey, Biden just signed this infrastructure $1 billion bill. Like, I need some of that money. And I end up getting a KKR infrastructure thing and making good money off that. But that's the thing I tell people is just to listen and learn as a young person. And then, if you're at a higher level and you're investing other people's money and all, like at different levels, but as a individual that just wants to invest, that's what I'd be my best advice. And that's what I tell young guys to play ball and come out. Like, man, just learn and talk to smart people. And then if you see something that you like, just ask questions and see if you can get into it. And that's my whole message to most young dudes I talk to.
Yeah, it's smart. I mean, you hear tragic stories about athletes sort of running out of money because they don't take care of it after they make it.
Oh yeah.
Yeah. Some really sad stories there.
Partying's half of it.
Yeah. How much? So we have time. We have really one more set of questions. So I figured I'd do a little bit of a lightning round. So maybe just we go down and listen. Tell me, what trend or opportunity or risk are you most excited about and most worried about? And you could pick the topic, whether it's business or politics, just what's on top of mind now, because we're in such strange times, such volatile times in every way, politics, business, economics. Yeah. So I just want to hear what sort of, what people who are as important or interesting as you all are thinking that are important for the people in the audience here. Start, Kange.
Sure. I look a lot at enterprise software, and I think because of a lot of regulations that are happening around the world when it comes to sustainability, corporations are forced to really pay attention to this, and so now they're investing in software that deals with that. And so there's some really innovative companies that are coming up. Before, they couldn't sell into companies because that budget wasn't really allocated to that. And so I love how I think that's going to change in the next few years.
What are you worried about?
What am I worried about? On the same side, just what's happening with the economy and jobs that will be lost in the future, and how that's going to probably over-index on our communities.
Yeah. Okay.
Yeah. So a couple of things, and not a partisan statement, but I'm worried about the revival of MAGA and what that means in terms of the disruption of inter-American politics in the midst of what's going on in Ukraine and Russia and all the other things, and who knows where that all goes. So that's one. I'm also concerned as a Miami person, moved here from Jamaica, raised here, about climate resiliency. Not a Miami problem, it's a global problem, but here we're particularly attentive to it. So I'd encourage you all, just go and check out NOAA's website and play around with the sea level rise and look at the cities that could get impacted if sea levels rise by 2-3 feet, which projections right now suggest that by 2050, the mean projection, right? So not the worst case, the mean projection is about 2 feet rise. It's not troublesome, but then move that to 4 feet and then see what you think about that. And I think we'll all start saying, hey, we need to figure out how to address this. Not a Miami problem only. There are a lot of cities that will be impacted. But that's also an opportunity, because if we're going to live on this planet, we need to come up with solutions, and maybe there's a business to take us to another planet, but that's not there. And then finally, I think all the people in this room, all the shades, if you're here at Culture Shift, you're projecting a certain mindset that would suggest you should be equally excited about the rise of Africa. It may be a little bit less accessible, a little bit more challenging perceptually, but if you're here, the mindset that brought you here should also make you think about what's happening in Africa and how can I connect to it and learn about it and be a part of it, because it's significant and it's a multi-generational thing, because their time probably has arrived or is definitely arriving.
That's great to hear. Alejandro.
Yeah, so what excites me right now, I would say there's probably three things. One is the metaverse. And I would tell you all, if you have a company in front of you that is doing some exciting stuff, again, disruptive, invest in it. But even more so, if there's a combination of metaverse plus AI, invest even more. So that's the first thing. The second thing I would say is that what's exciting is all the great work and startups that we're seeing around sustainability. So around climate change especially, and other things around how to make things greener. Definitely an important area where we're looking also into putting in some money. There are a whole lot of things where do we want to put some money, but those are probably some of the areas. Things that worry me, I would say that trifecta of the war in Europe, the inflation, and potentially a deep recession, sometime around April of next year, and that's worrying for a number of reasons. But the other thing that worries me is that 2% thing that I mentioned before, and we just got to figure out a way how to crack that.
Yeah. Okay. All right. You get last licks, Channing.
Positive and negative is the real estate right now. I do a lot of real estate investing, residential and commercial, and just what's going on in Miami. People are paying $100,000 over asking price.
That's right.
This bubble has to bust. I was a part of the '08 one, and trying to strategically set up. I put money to the side now to set up when it busts, but you have to strike while the iron's hot, and just the timing and all that stuff is striking. But the real estate right now is just dumb. We've done well in the past, but now it's just too much for what you're getting, and so try to figure it out. If we could figure it out, everybody would be millionaires, So they're trying to figure that out. So the good and the bad, I know it's something to happen there, but when is it going to go? The feds are raising the rates. When are people going to start? When are people going to start losing these places and stuff? One man's trash, another man's treasure, whatever. You got to figure this thing out. But the real estate market is what I'm really looking into daily to try to figure it out.
Yeah, and it's a microcosm for the whole country and the housing market, frankly, and that's where a lot of people hold their wealth. So everyone's looking at that across the country, I think. All right, everybody. Well, thanks. Hope this is a good start, Andrea, to what's sure to be a great event this weekend. Thanks for this talk, everybody, and let's hope for better times. And thanks all for listening. Thank you. Bye-bye.